Okay, so there is a ton of noise around XRP right now, right? You're seeing these huge price productions, hearing about major deals with Wall Street. It's a lot to take in. So today, we're going to cut right through all of that hype and really focus on the strategic facts to see what's actually going on.
Let's just dive right into the headline that's been absolutely everywhere. XRP hitting $70 by the end of this year. I mean, wow, that's an explosive claim for sure. So let's really unpack what it would take to even get close to that number.
And then there's all this chatter about these major moves into the heart of traditional finance. Is Ripple actually plugging into the machinery of Wall Street? What does that even mean? And on top of all that, we're hearing about tangible, real-world assets. We're talking hundreds of millions of dollars in diamonds being brought onto the XRP ledger.
So, with all these headlines flying around, what's actually real? Look, this isn't about making wild promises. This is about looking at the hard facts on the ground to separate the genuine signals from all the market noise.
Let's start with the tangible stuff, the real progress. Because honestly, before we can even talk about price, we have to look at the actual infrastructure Ripple has been building. This is the bedrock of the entire conversation.
And really, it breaks down into three key areas. We've got the Wall Street connection, the tokenization of real assets, and the expansion of the whole ecosystem. Let's walk through each one so we can really understand the long-term strategy here.
Okay, first up, that Wall Street connection. So Ripple Prime has integrated with the DTCC. Now, if you don't know, the DTCC is basically the central nervous system for all U.S. securities trades. This integration is a huge deal. It's like connecting the plumbing between the crypto world and traditional finance. It creates a potential gateway for big institutions to use the network down the road. But, and this is a really important but, we have to be super clear here. This is about building the railroad, not running the first train. Wall Street firms aren't suddenly going to be using XRP tomorrow. It just means the path for them to do so is now being paved. It's a foundational move, not some catalyst for an immediate price jump.
All right, next, let's talk tokenization. This is really interesting. Ripple just closed a groundbreaking deal to tokenize this amount, $280 million, in real physical diamonds. So why are tokenized diamonds such a big deal? I mean, who cares, right? Well, you should, because it's a massive signal of Ripple's strategy. They're clearly moving beyond just simple payments and are now targeting the gigantic, multi-trillion-dollar market of real-world assets. This positions the XRP ledger as some serious infrastructure, not just another speculative coin. Okay, so we've looked at the foundational work being done. Now, let's connect all this back to those wild price predictions and really tackle them head-on. So, as we said, an analyst projected XRP could hit $70. Let's just put that prediction right next to its approximate current price. The gap between these two numbers is just enormous. It's so important to visualize the sheer scale of what's being claimed here.
You know, to make that jump, it would need a gain of over 5,000%. We're not just talking about a nice little rally here, we're talking about a market-altering explosion. Let's translate that into dollars and cents, or rather, market capitalization. A $70 XRP would mean its total value would have to swell from tens of billions today to multiple trillions of dollars. I mean, to put that into perspective, its value would need to be bigger than almost the entire crypto market as it stands today. So the real question is, while anything is technically possible in some far-off future, is it probable right now? Is a move like that even likely in the economic environment we're in today? Well, the numbers alone suggest it would be, let's just say, extremely difficult. And that's because, and this is key, XRP doesn't exist in a vacuum. There are much broader market forces at play, and right now, those forces are acting as major headwinds, pushing back against this kind of growth. You know, the whole global market is feeling pretty cautious. We've got geopolitical tensions, and investors are just dialing back their appetite for risk. We're seeing less interest in futures, and trading volume from retail investors has weakened. When big money is running away from risk, high-growth assets like crypto are usually the first to feel that pressure. And then there's another factor, one that's pretty unique to XRP, that monthly release of tokens from escrow. Now, in a strong, roaring bull market, that extra supply might get soaked up pretty easily. But when demand is already low, adding more supply to the market can really act like an anchor on the price. So let's bring this all together. It's time to separate the real structural signals from all that speculative market noise and put together a final strategic analysis. On the one hand, the positive signals, the bull case, are crystal clear. We're seeing real integration with financial infrastructure and actual tangible use cases like asset tokenization. But on the other hand, the bear case is pretty strong right now, dominated by the tough market headwinds and, let's be honest, the unrealistic expectations created by all this speculative hype. Which really leads us to a simple, honest conclusion. XRP is not smoke. The institutional progress, the infrastructure that's being built, that stuff is very, very real. But it's also not magic. A price doesn't just explode because of a headline. It moves based on a powerful combination of things: deep market liquidity, genuine, widespread adoption, and of course, a healthy, favorable global market.
And so that leaves us with the ultimate question, doesn't it? The groundwork is absolutely being laid for something potentially massive. But can that foundation actually support the full weight of global finance? That's the multi-trillion-dollar question.